Tesla Q2 and Q2 earnings. Tesla has one of the most recognizable brands in the world. People who buy a Tesla often do so to associate themselves with the brand. Many find it cool to say, "I drive a Tesla." In this video, we are going to talk about Tesla Q2 and Q2 earnings, comparing the expectations of Wall Street with the actual results. There was a consensus among Wall Street analysts that Tesla would bring in $16.521 billion in revenue and earn $1.81 per share during the second quarter. This projection was tempered by concerns regarding the temporary shutdown of Tesla's Gigafactory in Shanghai, which was anticipated to have an impact on the deliveries of vehicles. Tesla was expected to deliver 300,000 vehicles throughout the quarter, according to analysts' predictions. On the other hand, Tesla exceeded these predictions in several important areas. The company reported revenue of $16.394 billion, which was slightly lower than the expectation but remarkable given the conditions. The actual earnings per share EPS came in at $2.02, which is a big increase from the $1.81 that was anticipated. Additionally, Tesla was able to boost its cash reserves by $0.8 billion, bringing the total to $18.3 billion, even though it delivered 250,000 vehicles, which was 50,000 fewer than what was planned. Management of the energy industry performance. The energy business of Tesla continues to be a significant aspect of the firm's long-term strategy, even though it is frequently overshadowed by the automobile subsidiary of the company. Solar energy generation and energy storage products are also included in the energy division's product offerings. Even though the results did not include a breakdown in the financial details of this section, Tesla's energy storage deployments have been constantly rising. Increasing energy prices and a worldwide trend toward renewable energy sources are driving up the demand for goods such as the Powerwall and Megapack, which are becoming increasingly popular. This business line is essential to Tesla's diversification strategy because it ensures that the company is not only dependent on the sales of automobiles. In light of the ongoing energy crisis throughout the world and the growing number of worries over the environment, Tesla's energy division may be able to play a major part in the company's future expansion. Rivalry between electric vehicle manufacturers in China. Electric vehicle EV manufacturers from China, such as BYD and NIO, are rapidly increasing their market share, both in China and worldwide. The strong support of the government, broad supply networks, and competitive pricing all work to the advantage of these establishments. Despite the tough competition in China, Tesla continues to be the leading player in the country. The Shanghai Gigafactory, which is Tesla's first facility outside of the United States, is an essential component in the company's efforts to preserve its competitive advantage in China. Even though Tesla's deliveries during the second quarter were negatively impacted by the temporary shutdown of this factory owing to COVID-19 lockdowns, the long-term outlook is still optimistic. Tesla needs to continue investing in expanding its production capacity in China, which is essential for the company to maintain its growth in the largest electric vehicle market in the world. The development of technology for fully self-driving vehicles (SSD). Tesla's full self-driving SSD technology continues to be an essential component of the company's forward-looking ambition. Tesla continues to develop and deliver SSD upgrades to its customers, despite the hurdles posed by regulatory authorities and the constant scrutiny that the company faces. Some investors and customers have expressed disappointment that the progress of FSD has been slower than they had planned, yet the technology is making steady progress. Over time, the price of FSD has increased, which is a reflection of the enhancements that have been made to the software as well as Tesla's faith in its potential in the future. In the United States, the SSD package is currently priced at $15,000, which is a considerable increase from the initial price point. This price strategy gives the impression that Tesla is placing a bet on the potential long-term value of autonomous driving, which has the potential to completely transform the transportation sector. Market conditions and the influence of macroeconomic factors. Even though inflation, rising interest rates, and disruptions in supply chains continue to affect industries all over the world, the macroeconomic situation continues to be highly tough. Because of these variables, Tesla has experienced an increase in the costs of raw materials and logistics, which may affect the company's profits. Despite this, Tesla has been able to successfully manage these problems and still generate great financial results, which is indicative of the company's robust operational efficiency and competent cost management. Concluding remarks. These results for the second quarter of Tesla's fiscal year reflect the company's resilience and ability to overcome challenging situations. Even though the Shanghai Gigafactory was shut down and the company failed to meet its vehicle delivery targets, Tesla was able to surpass the expectations of Wall Street in terms of both sales and earnings. While the energy business of Tesla continues to expand and diversify the company's revenue streams, it is less visible than other aspects of the company. Even though the competition from Chinese electric vehicle manufacturers is getting more intense, Tesla should be able to maintain its market leadership position thanks to its powerful brand, cutting-edge technology, and strategic investments in China. Even though it is a slow process, the development of SSD continues to be an important component of Tesla's future. It has the potential to revolutionize both the firm and the automobile industry. Overall, Tesla's performance in the second quarter of the year reaffirms the business's position as a market leader in the production of electric vehicles and indicates that the company is in a strong position to maintain its growth trajectory despite the obstacles that come from the outside. If you enjoyed this video, don't forget to give it a thumbs up, hit that subscribe button, and leave a comment below with your thoughts. Your support means the world to us.